Monday morning, folks. Welcome to a brand new episode of the Finmet Mondays podcast. We are at unprecedented levels once again, Sunil. Gold hitting highs, silver also hitting new highs. So this is definitely new territory for a lot of our viewers who now be interested to know where are the next levels, what's the outlook like. Interestingly, silver saw more of an ascent in comparison to gold. What do you think could have been the reason behind that, and what do you have to make about gold's ascent as well?
Silver is a really interesting story. I would say that we haven't reached all-time highs. We briefly saw $48 about a few years ago, and we also saw around $50 during 1980. So, so in that way, silver still has some way to go to reach its earlier highs, and I think that's what is driving the silver prices higher. I think people feel that silver is a more volatile gold. And so, with gold going up, silver is going along with it, but at a higher momentum. So, for example, in the last 2 months or so, we've seen gold go up by about 10%. We've seen silver go up by about 20%. So, that's why silver has a little bit more volatility. And so, people who are on the speculative side of the market prefer silver compared to gold.
What do you think is the outlook, Sunil, for the next, let's say, 1 or 2 months for gold, given that we have the first rate cut now that was initiated by the Fed? How do you think that is going to impact gold prices going forward?
Yeah, it continues to be bullish. It's really driven by money flow. It's really driven by the fact that there is new money coming to this gold market. The gold market itself is very small. You have producers selling gold, you have consumers buying gold, but you have this external force of investment demand, which is really driving the price higher. We don't see that changing. You saw that actually just after the Fed fund rate decrease, gold came off about $50, $70. But then soon after that, within a few hours, there was a wave of buying once again, buying on dips, and the price went higher. And now we've seen higher levels just on Friday. So I think the bullish story remains in place. There don't seem to be any factors which threatened it at this moment. So I think it's more to go.
We had the gold conference in India last week, and I'm sure there was a lot of talk about the prices again. What was the conversation like amongst the market participants? What were they more focused on, and any other things that would be interesting for viewers to know?
Yeah, I think the talk was really a couple of things. One is, I think jewelry demand has held up okay. People are quite surprised given the fact that we've moved from 70,000 rupees per 10 grams to 120,000 rupees or 110,000 rupees per 10 grams in gold price. Uh, s- Despite that, jewelry demand seems to be okay. Of course, it's off a little bit, but that's to be expected. But the people's view on gold remains positive. There seems to be a lot of investment demand. So I think overall, the people on the investment side of gold were very bullish. There was a lot of talk about new digital gold investments, ETFs, futures. So any form of investment avenue for gold is the one that was, I think, most bullish. So that's the takeaway for me.
Thanks, Sunil. Let's see how the markets play out this week. But till then, thank you so much and goodbye.